So the three musketeers, that's Li Auto, XPENG and NIO, should all have some exciting news this coming week. That's the last week of November. Now nobody's talking about this, and if we position ourselves properly, we should be able to make some good money off this. So guys, stick around. Hey, what's up guys, this is Sankey from Stockflix. If you're new to the channel, this is the place where we talk stocks and shares. Now before I talk about Li Auto, XPENG and NIO, please do check out my link down below. That's trading 2 on 2. Grab yourself a free share of stock worth up to $100 by signing up through the link. I actually had someone who used the link and actually got a free share of stock of NIO. If you saw my 2021 price prediction for NIO should double by next year. So guys, he's doubled his money, so that should be pretty cool. So do check the link out, it really helps the channel out. So guys, we're approaching the end of November. We're just a few days away from December. So what this means is that Li Auto, XPENG and NIO are all going to release their November delivery numbers. So guys, this is significant because we've seen what can happen to a share price when they produce standout delivery numbers, such as NIO when it produced 5,000 deliveries in October. So guys, we want to be paying attention to this and positioning ourselves. So what I'm going to do is I'm going to run through Li Auto, XPENG and NIO and go through where I think the opportunity is to buy some shares before there's a potential rise in that share price off the back of strong delivery numbers. So guys, let's start with Li Auto. So I think there's some real opportunity with Li Auto right now for several different reasons. But before I tell you those, please hit a like on this video because it really helps the channel out. Now, first things first, Li Auto did about 3,500 deliveries in October, right? They're said to do about 11,000 deliveries for Q4. So in November and December, they're estimated about 3,500 again. But the key thing here is that Li Auto actually have their own manufacturing plant. They have control over their manufacturing, unlike NIO, right? And the capacity at their factory is 100,000 vehicles a year. So that equates to 8,000 vehicles every single month. So you can see the gap between what they did in October, which is 3,500, and their potential, which is 8,000. Now guys, we've seen what can happen to a share price like NIO's, for example, when they did 5,000 deliveries, right? It can spike. Now, if Li Auto were to come out and said that they did 10, 20, 30% over the expected, which is 3,500, let's say they did 4,000, let's say they did 4,500, which they can do. Guys, we're going to see a big spike in that share price, right? It's going to get a lot of investors excited about Li Auto. And we know that the EV market is booming, it's growing, awareness for these companies is growing, their brands are becoming more powerful on the ground in China, right? Remember, the brand loyalty to these Chinese companies is huge. So it's a possibility that a Li Auto could do over 4,000 deliveries, completely knock estimates out of the park. And that's why I want you guys to position yourselves and get ready for a potential outcome like this. Now, on the share price numbers, guys, the share price is looking pretty nice. They're about 17% below their 52-week high, right? So right now they're trading about $40. Their 52-week high was about $47. So there's an opportunity for these guys to spike right back up to their 52-week high, which is about the $47 mark. And that's a nice 17% gain on your investment, right? Just from positioning yourselves early, understanding the dynamics of the company and what can potentially happen, guys. So I would say you guys grab yourself some Li Auto stock, right? They've got very good future potential, but this is also an opportunity to make quick returns just off the back of being aware of their business model and what could potentially happen. Guys, on a valuation perspective as well, I always tell you guys, if you want to value an electric vehicle car company that makes sales, divide its market cap by its deliveries for the entire year. If you do that for Li Auto, each delivery contributes 1.1 million to their market cap. This is the cheapest out of the 3 Chinese electric vehicle companies. So that's 1.1 million for Li Auto. XPENG's is the highest at 1.7, and NIO's is the middle range in between the two at 1.5. So guys, these guys have the cheapest valuation out of the 3 Chinese EV car manufacturers. So it's looking like a pretty solid buy from my end. So I'm loading up a bit more on some Li Auto stock. I think the dynamics are going to work, are looking very good. And I think there's going to be a nice jump in that share price. They've got a lot of things working for them at the moment. So guys, now let's move over to XPENG. So in October, XPENG did about 3,000 deliveries, and for Q4, they're expected to do about 10,000. Now, again, this is about 3,000 every month that they're expected to do. Similar to Li Auto, XPENG actually have their own factories, and the capacity is equal to Li Auto's. So they can also do 100,000 vehicles per year. Again, this equates to about 8,000 vehicles per month. So guys, the gap between what they're producing right now, 3,000, or the latest quoted figure, which was October, 3,000, versus their potential, which is 8,000, guys. So there's a big gap there. They can do a lot more sales than what they're doing currently. Now we know XPENG came up with some interesting news that they're introducing their LiDAR technology. They've got a new P7 model. So they're just generating hype and excitement for their brand, right? More and more awareness for their brand. So guys, we could see a spike in November for the deliveries. Guys, we're approaching the Q4 as well. It's festive season, so there could be an uplift there, guys. So they could do well over that 3,000 number. They could do 4,000. They could do 4,500. It is a potential. So just we as investors, we just want to position ourselves early, guys. So this is the kind of thing that I'm thinking about well ahead of time before it happens, so I can capitalize on the gains and let you guys know first. So I like the fact that XPENG is trading below its 52-week high, which was about $74. It's now trading about $64, right? So that's about 15%, right? So if they do produce stellar deliveries in November, you're going to see a spike, potentially up to that 52-week high again. The thing to note about XPENG, and I've said this before, is on a valuation perspective, compared to Li Auto and NIO, they are by far the most expensive stock to buy. So guys, if you do that equation that I said, if you divide their market cap by their deliveries, each delivery for XPENG equates to 1.7 million added to their market cap, right? So you could think about it like that. Every time XPENG sell a car, it adds 1.7 million to their value. That's a lot higher than NIO and a lot higher than Li Auto. And I'm not sure it's fully justified, right? Yes, they have very high sales, but I'm not sure. I don't think I can justify the fact that they're way above a Li Auto and a NIO. Considering again, their margins aren't the best. Li Auto actually have fantastic margins. You know, they have margins of 18% on a gross margin level, compared to XPENG's, which is 4 point something, right? 4 point something percent. So you can see they're not the most profitable out of the three, right? They will be making a lot of progress to become profitable, but at this stage they're not. So I don't think I could justify the fact that their valuation is very, very high. It'd been nice to see them in line. So guys, if XPENG was to be valued in line with NIO, their share price would actually be $54. So as you can see, it's about 15% below what it is now. It's about $64, right? So it's quite a drop below. Now, I don't think we're going to see a 15% drop in XPENG unless there's some adverse news, right? Unless they have, they pull cars back, or there's some production issues, or, they have a notable change in management. I don't think you're going to see a 15% drop. So in terms of what I'm doing and what I want you guys to do is just to hold at the moment. If you don't have any XPENG stock, do try and wait for it to drop below 60. If you can, closer to the 55 region. Then they're nicely in line with the price of a NIO stock, and you're getting good value for money then, and everything is justified, right? So just hold at the moment. Yes, they might have standout news and their share price might pop, but they are looking pretty expensive right now. They're a fantastic company. Long term, I'm very bullish on XPENG as well. Last but not least is NIO. So guys, these guys did 5,000 deliveries in October. They're expected to do about 16,000 to 17,000 deliveries for Q4. So that's just over 5,000 deliveries for November and December. Now, what's different about NIO compared to Li Auto and XPENG is they don't have their own facility, right? They don't have control over their manufacturing, and there is capacity issues, right? So if you don't know, these guys have their cars manufactured by Jack Motors, and the capacity right now is about 5,000. So these guys must be busting at the seams right now, right? They must be working their ass off in their factory. There must be no space. They must be crammed in there like sardines. So it's unlikely that we're going to see too much more than 5,000, unless they're holding stuff back from us. They're not telling us that maybe they're doing double shifts or they've had factory extensions and they're able to go well past that 5,000. So I don't think there's going to be too much surprises for NIO. At best, I think about 6,000 deliveries. Now, I don't think that's going to move the share price too much. I don't think it's going to surprise investors. We're all expecting them to do in line. So with that being said, November deliveries are looking a little bit less exciting for NIO because we know their capacity constraints and it's unlikely that they're going to surprise us. Now, they could be holding things back from us and they could deliver a knockout November, but it's probably unlikely. So in terms of their share price, they're sitting about 5% below their 52-week high. This isn't a bad thing. NIO's a fantastic company and they've got fantastic future growth prospects, right? There's their Europe expansion, there's NIO Day coming, there's their 2 new cars next year, they've got their 2nd generation battery swapping station, so the future really is looking bright for NIO. So in terms of my strategy for NIO, I would just keep dollar cost averaging into NIO. So guys, that brings us to the end of today's video. Please hit a like on this video. It really helps the channel out, gets the channel out to a much wider audience. So guys, if you haven't already, hit that subscribe button, become part of Stockflix. We're growing nicely. Guys, I'm coming to you every day with value bombs and insights. So you want to stay tuned, check out the channel often and keep consuming the content. Guys, the ethos here is that everybody's a winner. Nobody gets left behind. We're here to make some good money, grow our portfolios and achieve that goal of financial freedom. So guys, thank you once again for checking in and I'll catch you next time.